Hyper with the weekend video clip, and it's Saturday the 27th of April. Starting with the Dow this morning. Right, we saw the peak back in October up here, then saw this A, B, C corrective move followed by this, looks like a 5-wave move, wave 3 to there, 4. Now a rising diagonal for the final part of this move, so a bit more downside probably. Ideally new highs. If we see new highs, it could be that we will see a major peak. In any case, having seen 5 waves up, we'd expect a pullback from there. So it should be a fairly low risk trading opportunity, depending on your stop parameters. There is a possible inverted head and shoulders. There's a head here, a bit of a pinhead. One shoulder here, and a rather small shoulder there, but that is a possible head and shoulder, inverted head and shoulders count. But even so, if we see that, I'm still looking for a sell-off once we see these 5 waves up, which a week or two should see that completed. The DAX is a fair way off making all-time new highs. It's currently stuck at the Fibonacci 61.8% level here, around 12,330. The Dow goes up, DAX I'm sure will do the same, but I think new highs are less likely. And again, we're looking for a sell-off once that peak is in, but right now the trend remains. I'll tell you the Footsie, we have got 5 waves off the top here. This is the 30-minute chart. 1, 2, 3, 4, 5. So an ABC, maybe up to around there, could lead to another sell-off. So that may tie in with peaks in the DAX and the Dow. Not a very clear pattern on Footsie, but that's a little bit worrying, although, of course, all 5 waves means is that it's likely to continue, but it could be a corrective ABC rather than being a full bigger 5 to follow. So it's not necessarily that dramatic at this point. We've had this ABC correction now, which could be over. I've been saying 1250, 1260 for the low. Well, it came at 1266 so far. Quite a good spike here as well, which is encouraging. Let's have a look at shorter term action. Okay, I like to see 5 wave moves, as you know, following the Elliott wave theory, but this is just a muddle. This is a solid spike though, that's encouraging. So traders, you can use spikes by putting stops below them, buying above them, putting stops below them, or of course it's a selling spike the other way around. So the theory is that this shows determined buying. If there are determined buyers in place at one point, then there may well be in place if it retests that level, so the stop is more secure. Not of course totally secure, because markets never give us total security. So that is worthy of consideration of a long position, and it's up to individual traders how they trade these things. But so this is not ideal, but we are pretty close to that ideal support level on gold. The ABC is now about right in terms of time and price. So, even though this is not an ideal pattern, the spike does just tip the balance. All right, Bitcoin. The last few days there have been talks of a massive crash in Bitcoin. When you see the blip on the chart, you wonder what people are looking at really, but I guess they're just very short-term orientated. It's not an insignificant move. It's gone from about 5,600 down to about 5,000, so 10%. But it's hardly a significant crash in any sense of the word at all. And it fits in very well with the Elliott wave count. 1, 2, 1, 2, 3. And this is part of wave 4, which is what I've been talking about and saying to expect. No big deal. It would become a big deal, of course, if it accelerated down below sort of 4,150. That would be something else. But right now, all we're seeing is totally normative behaviour within a corrective move, within a continuing uptrend. So, as I say, things can obviously change. But so far, it's no big deal, basically. So very much in line with what I'm looking for. Counts as a wave 4 with a wave 5 to come, and then another 4 and a 5 before we see the final peak of wave 1, as I'm counting it now. And then I would expect a much larger rally later on in the year after another correction. So no change of opinion on Bitcoin. However, Ethereum does remain of concern. We've got the wave 1 here. That's a clear 5 waves. The regular ABC, which shows some strength at the time, given that it made new highs in the B wave. Another 5 wave up here, which is 1 of 3. then you've got 2 of 3, but after it gets all a bit dithery, this could be one of the next 3, and this could be an A, B, C, with a view to it going higher. There would therefore be some Bitcoin and Ethereum would cease to move in harmony, in the sense that if Bitcoin has a C wave to come, yet if Ethereum has seen the C wave already, then it may well be that Ethereum will rally, whereas Bitcoin doesn't. Of course, they're totally free to do that. I mean, there are different coins, different markets, different news items, etc., etc., etc. So that wouldn't be a huge surprise either, in fact. But Ethereum does need to prove itself. Bitcoin has broken away from the highs we saw earlier in the year, at the end of last year, or beginning of this year. Ethereum is still divvying around, trying to break through the resistance level, and has fallen back below it again. So Ethereum is yet to establish this as other than a corrective move. It does look pretty corrective. A, B, C, for example. But then this is corrected too at the moment, because that could change as well. So Bitcoin is looking good, Ethereum not so good. Right, that's all for today. If it was useful, back to the report on Tuesday morning for subscribers. Have a great weekend, thanks for listening, and bye for now.